Hello, hello, hello. Happy Friday, everyone. How is everyone doing today? Good morning, Patrick. Happy December 1st. Oh, already December. Where has the time gone? Good morning, Sterling. Oh, yay. More wonderful news out of the administration. Good morning, Anissa. All right, Sterling, thank you for putting in the news. Good morning, Heinrich. Again, a little behind, having trouble getting some of the dogs to eat, so it's still interesting right now. But we gotta keep going on my least favorite trading day of the week. We had some interesting end of the month price action yesterday, some interesting rebalancing. Yesterday was a great example in the NASDAQ of the breakdown pattern, the double. We talked about doubles yesterday, but we did not get the actual trigger on the close. So, very, very interesting there. I'll go over a couple things that I was looking at yesterday. But important today, we have S&P manufacturing coming out at 845. The more important one, ISM manufacturing, still expected to be in contraction at 9. So we'll have to keep seeing that. Goolsby at 9. Then we have Powell at 10. And then it's just the rig counts. So the morning and then the afternoon fades away. This morning you have Tesla down, Cybertruck announcement yesterday. You have Pfizer down big. Nothing else is down terribly, but no mega caps are really up this morning. So let's see if we come to our groups. You have basic materials. The only thing really leading consumer cyclical getting hit today, going into December 1st. Fed watch. Where do we sit with the Fed watch? We're sitting at pause, cut in May. So that's where we sit before we get to go away. And fear and greed still solidly in greed mode. Today it was just BMO. Yesterday, did you see the gap in Alta? Holy smokes. I mean, what's that? Like an 8% gap? And it wasn't that amazing with the earnings. Insane. Oh, well. Good morning, Royal Palms. This market is absolutely insane again. We've gone to market insanity time. But the overall, we're still in a sideways correction. To really start me watching for that pullback, I still got to get some solid price action below 45, 46 in the S&P. Breakout mode is 45.74, just to retest the high area of the 45.97 to about 46.01. Okay, so it's a tight little, especially today being a Friday, but we could be, unless Powell really gets something going, we could stay with the back and forth price chop action. Does this not signal a recession? Fitch rating expects metal prices to decline in 2024 except for gold. Well, if copper, especially watch copper because of the industrial use of it, yeah, generally. But that's why you have the price action in crude too, because it's sort of pricing in a recession. But stocks aren't. They're poised for just to continue to move on. So far, so it's dropping out with the S&P out overbought. Remember, weekly cycles still at the top, and weekly cycles trump daily cycles. It's going to be interesting to see if we roughly close this week with a doji pattern too, setting up an interesting possible breakdown next week. So we will keep an eye on that. The NASDAQ, here's what I wanted to, because we talked a little yesterday about the double. So, and it was on a daily basis. So we did get some momentum, but we did not have the accompanying tick to the downside. That's why I was very hesitant yesterday morning watching this, because it was like, all right, there was some selling pressure, but then it did not carry through. So this confirmed this is where if you're going to front run it, that's fine. But you got to be aware that if it's not going to close below this, personally, I wait for the confirmation signal to carry something overnight. Even though a little gap down this morning, that can easily change. Now, yesterday, you got some momentum. See here. Then We were down below that trigger point, but we got a really nice little double bottom. Triggered, pullback that did not invalidate it, came close. Remember, this is why the stop level's up here, to raise it the first time's up here, because came almost to that 75. If I drew those in the right way, 75 is 25 though. Came almost to invalidating it, stopping it out, and then went to the targets. So if you're trying to go short into this and then, okay, let's see if we can carry it, but then I get the double that could take it back above that price, which those targets did, taking it back above. So if it was going to complete that, there's no way, personally, that I would carry it home short, because now it's not, it's confirmed but not triggered. So, is it still in place? Yes. It is still in place, but it still needs the close below 15,938.75. And you see here it's tight against the rotation zone. So the targets are tight. Daily cycle still at the bottom for the NASDAQ and at the top on the weekly. All right, happy Friday, George. Good morning, Tony. Oh, wonderful. TLT is trending on X, which means the bond move up is likely over for the time being. Dow, very strong end of the month rebalancing day yesterday, taking it above the 87.5. So you see here, we closed again above the 62.5 back in November of 22. None of these pullbacks invalidated that. It finally completed. That's why timing is a nightmare sometimes. So next major level is 36,272. Not looking for that today. Watching for more. We'll still get some moving into stuff on the first, but I'm watching the 4-hour rotation zone personally on this. Russell, any breaks above here, still getting sold. Still getting sold. So it's cycles are moving up on the daily, but it's not making much traction. And this is actually, since this can't get any traction to the upside, I'm watching for a downside rollover play at this. But key resistance still, this 1821. That's any target to the upside. And then roughly about 1826 and then 1830. Key support still coming in right about 1802 to 1800, 1802. What else? VIX still in sell volatility mode. Nothing's changed this week with that. Still keeping an eye on 1431. The DAX hit the next target, 16,339, and pausing with very overbought. And this is getting very extended. See here on the weekly. So weekly cycles at the top and overbought near a very high, the highs from June and the end of July going into August. So would definitely personally be in trailing mode here for any longs and tightening up stops depending on your time frame. The notes, reversal bar yesterday and then the big gap up going into Powell. So running the channel up, if there's some very key resistance around 110.09, 110.10. If it were able to break through that 110.23 is the next key level. Major support I'm watching near yesterday with the rising rotation zone, this 109.12, 109.13. 10-year yields, not much. There's not any great patterns going on with the yield yet. Still watching for a better setup here. Going to be interesting because on any spike up now, the major resistance area is right about 4.39, 4.4. but I'll be watching potentially for some volatility into stronger bottoming pattern coming in. Cycles are finally starting to head up more so. So I'll be keeping an eye, but there's not a great setup today. Dollar index, we mentioned yesterday's high for the potential percent P buy, broke above there and closed above it. Little follow through this so far this morning, but the ISM numbers and Powell could change that. So depending on a time frame, if it's a very short time frame, it'd be more aggressive with the stock. If after yesterday's high was broken, it was bought. Other than that, we'll be watching for some kind of reaction in the rotation zone and then some kind of pullback before a potential next March higher. Remember, weeklies are at the bottom. We pulled back between the 50 and the 62.5 on the weekly. You see right here, coming right down that 62.5 and bouncing up strongly. That's why, remember, between that 50 and 62.5, that's a major reversal zone, both up and down. So far, we've pulled back to it. It got the reversal up. I'm not really, even if we pull back today, not really worried about that price action. The only thing that gets me bearish on the dollar is a close below 102 again. Crude, another example, spiking above, confirming the double, but not triggering it. Again, confirmed and not triggered. So, would still need to close. And why are there the two rules? Because a lot of people try to play the breaks, but from my perspective, the probabilities don't shift until you get the close. So if you're trying to play the breaks and you can't get the close, I can't carry it, at least. I don't have the full-blown probabilities in my favor. And this is really turning into a flagging channel pattern, with daily cycles getting back to the top area. So if this pattern breaks down, the flag rolls over, which is starting to look like a corrective pattern, we could be getting into a 1, 2, 3, 4, and a one more push down, fifth wave, before establishing more of a solid base. That's what I'm keeping an eye on with crude. Gold still pausing, still watching this 2050 for the breakdown for the potential gap fill. Other than that, sitting on the hands. Copper still trying to break out in the short term. Sterling mentioned copper, but headed up to a very key resistance area. So we don't cover copper a lot here. The yen, following a lot with the dollar. Still watching for a more significant bottoming pattern in the yen also, but nothing yet. Euro, watching the bottom of the rotation zone in this prior little support ledge, about 108.50, 108.40. But that's about it for a slight bounce, and then possibly taking out the rotation zone next week to continue the downward move. Nothing fantastic yet. I mean, the pound's still not able to close above the 62.5 and the big reversal yesterday. You're going to be watching for a more substantial topping pattern in that. I sound like a broken record because there aren't a lot of great setups today. The S&P, 455.38. Any upside move would be looking for the gap fill close, 456.40, and then roughly looking at 457.15 area. And then above that, if it did continue, 458.32. The next major target is 459.30. Key support, yesterday's low and Tuesday's low. So right around 453.30 area. We break down below that. The next target, I would look. See, I'm going to be watching if we pull back to these key areas for support in a choppier day, unless we had a major tick meltdown for the downside. So that's the only thing, and the next major target is 450.36. Good morning, Jacob. Yeah, and it's too long a conversation for a Friday at this point, but we can talk about VWAP. I've mentioned it a few times in the past. We can talk about that. Qs, but just not today. The Qs also confirmed but did not trigger the double. Gapping down a little this morning on any move up. Yesterday's close, 388.83. If you're looking for that double to still trigger, would need the close back below 388.05. Still downside targets. I'll watch yesterday's low, anywhere between yesterday's low area, this 385.82 to 385.54, then 384.29 and 383.03. To the upside, besides that gap fill to 388.83, then I look at yesterday's open price of 390.08. Then I'd focus on yesterday's high area around 390.50. I see there's with Tesla still back in that reversal zone and looking like it's going to gap down. If it starts getting below 230, 231.50, actually 231.50, with any momentum, there's still a gap to the downside to 223.71. So keep an eye on that. NVIDIA, pretty decent breakdown, pulling back into the rotation zone, pausing for a few days, and yesterday breakdown area. So going to be watching this major support coming in right around 459 to 460. If you have time, take a peek at UNH. It is approaching the all-time high. Invalidated this lopsided double, which never triggered. So that's looking like it is there. This is where, if it breaks out of all-time high, great way to come up with targets. So if it broke above 558, but this isn't just, I mean, look at the high area we're at again. This is the highs for April 22, August 22, November 22, December. Just below that, we have the highs from October. So this, now if it does break this, you could see some pretty strong momentum to the upside in the short term, and that would be 572.15, the first target. But this is a very key resistance area. We've run up there very strong yesterday with the end of the month rebalancing. Remember, a lot of stuff rotated into the Dow yesterday, end of the month. So be watching for it to chip away, but that's a very good thing to watch for if you're watching for an upside breakout. But if that breakout does not fail and it starts getting back below about 543, you could easily see a pretty quick pullback there. 25% of America's regular rich, defined as those who make at least $175,000 a year, consider themselves either very poor, or getting by, but things are tight. Money does not go far right now. Money is not going far. You know, it's just, everything's in la-la land. Everything's in la-la land, at least from my perspective. But overall, the markets is why, yeah, this run, I think this is the best. Does anybody have the stats on, this is like one of the best Novembers in the last 20 years. Really? But that's price action, that's price flow, and also all the stock buybacks. Buyback period starts going quiet in the next couple weeks. Okay? There's the closing window on the buyback periods. So keep that in mind too. I don't think this rally is going to sustain through year end. Everybody's focused now on, oh, the November rally is going to go into a massive Santa Claus rally. Let's see about that. But that's why we don't trade what we think. Also, we trade the price action. I think I've stressed that enough. Because what I think might happen doesn't have to happen. I got to look at the patterns in the price action. That's about it today. Just don't get chopped up. Being the first day of the month, we've already had a lot of back and forth price action today. So just don't, if you're a shorter term trader, don't get chopped. There's not a lot of great setups this morning. We've had back to the tick. See, yesterday, I'm just going to look at the tick. Even the tick Q did the same thing. But remember, yesterday, look, We were breaking down, especially the NASDAQ, but we never really broke down to get follow-through selling pressure. Look at the tick. It's been caught between just a normal range with reversals constantly. So that's why I'm keeping an eye. There's been very little. Look at the upside. Besides the gap up on Wednesday, no spikes above 1,000. No spikes below minus. So you got this little spike 2 minus 1,000 back on Wednesday for one bar, and the one back on Tuesday. But there's been very little sustained buying or massive buying or selling pressure. It's been more watching for reversals. So unless this starts changing to the upside and downside today, I'm more watching for reversal patterns at key levels. Is the ES still valid? I thought is it still valid? Yeah, it is. There we go. And so they have potential doubles on the 5-minute potential double. You can clearly see it on the NASDAQ. So that's the key areas. I'll be watching those peaks. As long as those hold up, I'll be watching the peaks. But are those two, see if we map these out. Let's just put it on the 15-minute. It'll be clearer. If we map these out, let's use the NASDAQ. It's cleaner. If we map these out, look, that takes us just to the end of the, look at where the end of the day was yesterday. I'm talking the U.S. session. That's only back there. And a little early morning European high area. So, you get to play a bounce, but then I'd be watching for another rollover reversal if that were to trigger. Yeah, and you got the Russell too. I think that's still valid. Yep. But same thing here. I mean, that just takes us into the yesterday afternoon range before the little ramp up into the close and then the reversal. Sorry, the European ramp up this morning and then the reversal. All right. That's where we sit. Thank you for pointing those out, Sterling. So that's what I'll be looking at going into the open. Hope everyone has a wonderful, wonderful weekend, and we will be back next week. Depends too on expenses. Are you talking about the Bloomberg headline or what Sterling put up there? I mean, you could go. Yeah, you have to manage expenses and everything, but money is not going as far as it used to. It's really not. I mean, our grocery bill, and I don't go hog wild at the grocery store, but it's absurd from where it used to be pre-pandemic to where it is now. It's just absurd. So, oh well. Yeah, you have to be nimble. You have to be nimble on these. If you're trading a short little 5-minute or 15-minute patterns, you have to be nimble. You're welcome, Anissa. Again, everybody have a wonderful. Hope you can relax this weekend and get away from the computer. Enjoy some family or friend times, whatever's around. Enjoy times with your pets, your significant others, and have a wonderful, wonderful weekend going into the holiday season to wrap up the year. Take advantage of it because before we know it, we'll be into next year again, ramping up. So do not let this time slip by. I'll talk to everyone later. Bye for now.